What's going on, guys? So yesterday, the day before, and even until Monday, I've been stressing the fact that we could potentially be trading sideways. And sure enough, that's what we've been having. Okay. And why is that? Because Friday we have CPI data, and the following week we have the Federal Reserve interest rate decision. Now, it all depends on how hot or if it's even peaked, right? Inflation, whatever the report says on Friday, that's going to sort of dictate and influence the decision for next week. So we can see that across the board. Right? We can see that sort of consolidation, patience type of expectation or expected move from the markets to see what they're waiting for, right? So that gives us enough evidence to track two counts, right? Intraday or in the hourly time frame, and one of them is being the bullish count, which we're looking for this potential triangle in the wave 4 to complete, then give us a push into the upside for the wave 1, or alternately we are met with rejection and we start fading lower. Now let's review this count, because we're going to take a look at the SPY bullish count, we're going to take a look at the bearish count, and also the triple Qs. All right, additionally, we're going to look at a complex idea that I have, not a complex idea, but a complex count, all right, on WXY count for the SPY that is sort of in line with our bullish count. So I don't want you guys to get sort of trapped if we start if in fact we start heading higher, right? Because the count that I'm going to show you will sort of cover that. In the event that we do head higher, then we got to be on the lookout, right? We got to have our both of our eyes open for that alternate. All right, so let's review the SPY here, as I mentioned, and as I mentioned this morning in the Discord group, right? So as you guys can see here, I posted this at 10 a.m. right? In yesterday's video, technically we can still trace sideways till CPI, and I just said that today. So the chart that looked like this, right? This is what I posted this morning and what I showed you guys yesterday's video. If you missed it, if you guys want to see these updates daily, right, intraday, consider joining Trending Waves. Now we're looking at this as a complex correction, but throughout the day, right, I ended up readjusting the count and looking at this as a triangle. All right, so implications are still the same. So we get a push lower into the E wave, right? We hold support at the 407 region, or even if we break below the C wave to invalidate this count, we can still hold support at the 404, just as long as we remain north of wave count invalidation, which is the 397, this red line over here. All right, just as long as we remain north of that line, the pattern could unfold in different ways. All right, but ultimately implications are still the same, pushing higher. However, if we start rolling over, then the truth of the matter is that our wave count is going to look like this, right? So far we have been holding just underneath the 418.93, which is the 1618 extension of A and B, to give us the C wave. We still have 1, 2, 3, 4, and 5, so maybe a smaller fifth wave up into the wave C, which is why, if we compare both counts, for instance, right, if we compare this one, we're still looking for one more leg higher, as well as here, right? So the C wave has 5 waves within it. So therefore, for that matter, we should be patient, all right, because that could give us, even if we see a push higher, wait for confirmation. So anyway, so as long as we remain north or stuck within the zone of 422 and 413, I don't see a reason why we should start becoming so overly bullish. All right, patience is what's going to save us in this market. All right, and being diligent and understanding the market direction and trend and how the cycles work, along with our Elliott wave analysis, we're going to be good. All right, so anyway, I think that here we are going to result higher, but we'll see. Now that alternate count that I was going to show you guys, so I'm sorry, I'm going to go back and forth here, so just bear with me. I'm going to go back up here because this will mean the following, right? I'm just going to zoom out to this much here. All right, and I'm going to just bear with me. So wave 1, ABC to the 2, this is what's completed, right? This count suggests that the wave 2 in the primary degree is complete, and now we're going to head higher into the wave 3. All right, we're in the makings of the wave 1 in the minor degree. We still have the intermediate degree, so 1 down to 2, 3, 4, 5, until so on. However, if wow, excuse me, let me have some water here. Okay. Our complex correction, right, still counts for wave 1 completed in January. However, the wave 2 still ongoing. All right, we have 3 waves down, 3 waves up, and 3 waves lower into the wave Y of wave 2. Now, I don't know what this is going to ultimately be targeted, but it is going to be a deeper correction, taking out the lows of May 20th. Now, where this falls in line and goes hand in hand with our bullish candle, guys, and if you guys have any questions about this candle, leave your comments down below. I'd love to hear your thoughts and see what you guys are thinking about it. But the idea is that if we do end up going higher, it's going to be in this A wave, right? Then we get that pullback in the B wave, where in the bullish camp will be wave 2, right? Now, if we start pushing north in this X wave above the 618, right, then it is likely that we are in the bullish count going up to the third wave. But if we start finding resistance within that 439, 427 region or that zone, then this should be the count. All right, ultimately speaking, right, and the last level of last resort, I mean, will be the peak here in the wave B at 462. Don't think we get that push in this count if this is the case, but I just want to make you guys aware that there's a possibility that this is going to be the count. All right, we see push going higher. People were going to get overly excited, all right, and the complex correction is going to really catch and trap a lot of bulls. So do be careful, please, I'm begging you, be careful, because this could still be a possibility. All right, guys, so 439, 427, that zone, you guys got to keep in mind that could be a complex correction. All right, let's jump over to the triple Qs, because I just had enough of complex and a bunch of nonsense here. You guys are probably bored and probably left the video. Just kidding, I hope you didn't. Anyway, so our bullish count in the triple Qs or NASDAQ, right? 1, 2, 3, W, X, and Y to the 4. We're looking for one more leg higher, all right? Wherever this lands, we may see a push lower in the pre-market or in the futures market overnight, and then we're going to be met with potentially upside opportunities by Friday into next week. All right, be patient of that. Invalidation, wave count invalidation to this count here, to this chart, comes in at 293, which is the red line, 293.86. So be on the lookout for that. I mean, there is opportunity to take on this wave 5. We'll see, because sometimes wave 5s can truncate, sometimes wave 5s can be short. It's just, it depends, right? So you got to be careful. My favorite, or my personal, is just to wait for the wave 3. That's where you have the biggest meat in the bone, and you could get pretty good returns for your investment in that area. All right, and last but not least, let's take a look at our bearish count for this bad boy here. Let's just shut these off, and it's still the same thing, right? So not much has changed, to be quite honest with you, because we're still stuck within that zone, right? That blue box that I've been showing you guys for a couple of days now. All right, and I see that a lot of people are trying to be bullish and then get chopped around having these call options. Guys, premium and implied volatility gets crushed with this type of movement and sideways. All right, don't consider understanding and learning different types of option spreads to take advantage of sideways movement, right? Like this, such as a butterfly, for instance. Anyway, all right, enough with that. So our upside targets, or our resistance, are the 315 to the 315.90, 315.59, 303. That zone, if it doesn't hold and we start breaking south of it, then expect markets to head lower in this wave 3 in a sharp manner. We'll know, we'll see it, right? I mean, you will feel it as well, because that move is going to be vertical and aggressive. But that will be confirmed if and when we break wave count invalidation of the bullish count at 293. All right, guys, thumbs up in this video. Thank you so much for tuning in. Really appreciate your time. I hope that you stood this long for the video, because it is informative. And if you guys have any questions, please leave them down in the comment section. Love to interact with you. Peace out.